Hello. Um, Good morning, candidates. Good morning. Good morning. Yeah. RBI's monetary policy, 7th April, the repo rate as and reverse repo rate not changed. Repo rate is 4%. Reverse repo rate is 3.35%. Marginal standing facility rate or within bracket MSF rate is 4.25%. Bank rate is also remaining unchanged at 4.25%. But cash reserve ratio has been raised to 3.5%. Statutory liquidity ratio is 18%. The real GDP growth for fiscal year 2022 is predicted to be 10.5%. RBI is to buy rupees 1 lakh crore of government security under the G-Sec acquisition program. The Apex Bank RBI has increased the center's ways and means advances by 46%. The current limit is 32,225 crore. It has now been increased to 47,010 crore. That is ways and means advances. And maximum end of pay balance for payment banks has been doubled to rupees 2 lakhs from 1 lakh. Payment banks now they can have accounts with 2 lakh balance. Additional liquidity facility of rupees 50,000 crores also sanctioned. Now let us go through what are the changes that have taken place. Cash reserve ratio has been increased by 0.5% to 3.5%. What is the implication of this? The RBI is feeling that the cash flow in the market is more, so it has to be absorbed. That is why they have increased the cash reserve ratio. So 0.5% of the total demand and time liabilities of the various banks will go into the RBI account of their account with RBI. With the result, the money supply will come down. If the money supply will come down, the inflation is also expected to come down. And another point is repo rate has been retained at 4%. Many people were expecting it to be reduced, and they also expected that the housing loan advances will come down, whereas there has been no change. And on the contrary, our State Bank of India has increased recently home loan interest rates from 6.7 to 6.95%. So this is what it is. And during this time, what happened, this say on 1st of April, Government of India reduced the interest rate on small savings accounts, small savings schemes, subsequently withdrew that circular also till June 30. Certainly from 1st July, the interest rates will come down and it will affect the interest of the depositors, or depositors who are dependent on interest income will be affected. The beneficiaries will be people who borrow money from banks. Next point is the GDP growth has been predicted at 10.5%, and RBI is likely to buy back 1 lakh crore of government securities. They feel that the government securities existing on the market or of a higher interest rate, they would like it to come down. The RBI has also increased ways and means advances to the central government from 32,225 crore to 47,010 crores because government needs a lot of money. Then another important change that has come about is payment banks, where instead of 1 lakh you can maintain up to 2 lakhs. and additional liquidity facility also has been granted. This is only contrary. On the one hand, they have raised the CRR to reduce the money flow. On the other hand, additional liquidity facility is also given. So let us see how the economy moves. These points are very much relevant for SEBI Grade A officers interview. It is very relevant for E.C.G.C officers interview and SEBI Grade A law officers interview also, and also for people who are appearing for other exams. This will be very useful. Thank you so much. Best wishes. And yeah, it is useful for I.A.S. also.